Welcome to another exciting episode of Wind Down with Kev. We always like to kick this off with gratitude, so let me start by saying thank you, and thank you. Thank you to everyone that's watching this on live stream, whether you're watching on Instagram, Facebook, or YouTube. Thank you. You are appreciated. Also, special thanks to all of you that have already hit that like and subscribe button. Thank you, and thank you in advance to those of you that are watching this today or at a later date and enjoy this content and that will hit that like and subscribe button. All of that is said, excited to bring you another wonderful episode of Wind Down with Kev today. I will introduce my guest to you in a minute. I might let him introduce himself, or I might just start throwing punches with 5 rapid questions. I think I'm going to start like that. Then I'll let him introduce himself. I have a third person on the panel. My namesake, Kevin, is here as well. But let's go ahead. I only have 3 seconds to keep your attention. So I'm starting rapid fire. I'm not asking him his name, nothing else. We'll get to that down the road. But Carlos Santana, at Santana Home Loans on IG. 5 rapid fire questions. You've gone from basketball courts to mortgage closings. What's the move that translates best from the game into business?
Competitive spirit, first and foremost, because the position as a loan officer is very entrepreneurial and sales driven.
Okay.
And second, teamwork. You work with a team of processors, underwriters, closers that you need to work together towards that goal.
Okay. I like that question. Y'all feel that out there? Talk to me in the comments. Let me ask you a question. What is your favorite meal after a long day of work? We're grabbing the tacos, we're going for the steak, arroz con pollo. What are we doing? What are we eating? Long day of work, the job, the kids. What are we eating at the end of the day?
That's a 2-part question. When you mention kids, you can't go too far into, doing a medium rare steak, right? Because you don't got the time for that. But usually, the rice and beans and chicken.
Okay.
That's a staple.
Okay. Love that.
And in my household, since my wife comes from the Croatian Italian background,
yes,
we dabble in pastas.
You better stop dabbling. You better eat some more of that pasta. My Italian, that's my go-to food. All right. Another question. Who's the athlete, past or present, that you would love to play one-on-one? Past or present, anybody?
I would love, and this is going to sound crazy, but I wore number 13 since I was younger because I saw a picture of Wilt Chamberlain holding the 100 points.
Yes.
And I was like, I want to be like him. So I would like to play Wilt because a lot of people don't mention him on the top list.
Yes.
And people that are still alive that were witness to his career say that he is, if not the greatest athlete, but one of the greatest complete athletes of all time, being over 7 feet and competing at Olympic level athleticism.
Volleyball. Yes.
So Wilt, going against Wilt, seeing what he got, and going from there.
I love it. Kevin, your uncle Danny Schindler would love that answer. People don't know Wilt was a high jump champion. You look at his numbers, it's ridiculous. All right. Driving between client meetings. What are you blasting in the car to get ready? Little hip hop, little salsa, or something else? What's the go-to music?
Depends on the mood. We can range anything from a little bit of John Mayer to calm down.
Yeah.
If I'm too hyped up. If I'm too low, I'll put him some Bad Bunny.
Okay.
Or if I'm, now that I have 3 kids,
yes,
sometimes I find myself listening to, Danny Go, Miss Rachel, something will pop in. And I'm just going through the motions sometimes. So
young parents, I hope y'all know who Danny Go is. I don't, but my grandson's listening to all of it. All right, last rapid fire question. Dad, athlete, mortgage pro. If your kids wrote a song about you, a theme song, what would it sound like?
It would sound like, hopefully, my daddy's the best because he's here every day. I see him in the mornings. He brings me to school, and he tucks me in at night every night. So that's
lyrics.
That's the whole theme of the song. I hope.
I don't care about
them knowing about my basketball career. I don't care about them knowing about my mortgage, if I'm good or not there. I just want them to know that I'm there when they wake up, I feed him breakfast. I'm there. I maybe bring him to school or not. Maybe mom does it, and I'm there from when they go to bed, and we do dinner together. And I think that's enough.
Wind Down with Kev audience. Now we've gotten to know Carlos Santana. Off the cuff, 5 rapid fire questions. Loved how you jumped in the game, getting to know you a little bit personally, instead of just going Billy business, name, your company, and what you do. But we are going to get all the way into that. So that being said, 5 rapid fire questions behind us. Tell the people a little bit about yourself, something we didn't cover.
So something that you didn't cover. I was born and raised in Puerto Rico till the age of 17. Moved to New York. My mom kind of kicked me out of the house and said, "Hey, you have to go get a better education and go to college in New York." Played basketball the majority of my life. Once I was done playing basketball, met my beautiful wife. That's how. Hey, it's like can be a Rolling Stone if you want to move on with this. And then now I have a passion for helping homeowners finance their home. So I'm a loan officer and do mortgages for a living. So that's kind of like an overall view of my current life and my past life and how I got here.
I love it. So before I reintroduce Kevin to the audience, he's been here before. Just coming to immediately to the present, before coming here today, we pushed the podcast back 15 minutes because you had an important thing to do this morning. What do we have going on this morning? We have preschool drop off.
Listen, I don't talk the talk about the song and the 5 rapid. I try to walk the walk every day. So today was till date the most important moment for my twins' life, which is the first day they met their teacher for preschool.
Yes,
Twin girls.
My twin girls, yeah.
Mm-hmm.
They're 3.5, so they have a later on birthday, November 11th. We thought about, should we hold them back or start school the next year, but they're good to go. They've been in daycare for a couple years, and they're taller, they're bigger, they fit in, so they'll be fine. And then today was a big day for me because we get to meet the teacher, know the facilities, and see them, wide eye of their new chapter in their lives.
I love it. I remember dropping this guy next to you off at daycare, and the joy and the pain, the tears that come with it. And Coach, you're a young dad now. One day you're going to be dropping.
I'll be a hot mess.
100%. 100%.
Carlos sees me at the park with Caleb.
That's the prince.
And Carlos
is
like, let him go, let him fall. And I'm like, I can't. His mother, but I know I'll be an emotional mess by the time Caleb starts school. So we shall see.
Good, Carlos. Have a brother's back. As a matter of fact, the last time I saw you, Carlos, I try to grab breakfast with Kevin, with Caleb, at least once a month, once every couple of weeks so I can catch up. So probably 2 months ago, we saw you at the diner, and we didn't even plan it. We wound up at the same park together, and we started having this conversation about your journey in the mortgage business, how you started, some places you had done, some high-end things, and where you are now. So let's dig into the mortgage journey a little bit about how you started in the business, and definitely, Coach, I'll have you jump in and ask some questions about the market now.
No, that sounds great. I'm excited to, open up and give any knowledge that I can to your audience.
I appreciate it. So how did you get started? 2 questions I'd like to ask any person, any profession that comes here. How did you get started in your career? And for the person that's listening and maybe interested in a career as a loan officer, how hard is it to get in? But how did you get started?
So to answer that question fully, I have to take a step back on what my background is and how I ended up where I ended up. So I graduated college with a computer science degree.
Okay.
It's a technical degree. And I got lucky enough to be able to play basketball overseas for a little bit professionally.
Okay.
Played for about 4.5 years. When I got back, anything I learned from my computer science degree was gone.
Wow.
Right? Because it's very technical, and still technology is moving on so fast that if you miss a couple years, learning language, programming languages, you'll be ancient.
Yes.
Yeah, right. So once I got back into the workforce, the natural transition for me was sales.
Okay.
So I did a couple of stints at different companies doing more technology sales.
Actually, I don't want to interrupt. Why was sales natural? Because we recruit for salespeople all the time. Most people are scared to death of sales. But why would you say that sales was natural with a computer science degree?
I wouldn't equate it too much of the computer science degree. That's more of usually that's more of an introvert
Right.
type of bachelor's degree,
Applications, yeah.
Got it.
because people are working behind the scenes, whether you're programming, you're very coding, you're computer centric, you're behind a computer, so you're not really dealing with humans. I would say that was more my personality, of me being more of an extrovert, wanting to talk to people, and being able to transition from playing a sport and not having any quote unquote career experience, right? I had no job experience. So
Got it.
that was the natural progression of like, hey, you know what? If you want to jump into it and sort of make some good money and learn about the real world, just go into sales.
Nice. Yes.
So that I would say that's more of my personality. I wouldn't say that's more of the bachelor. And also, if you're an athlete, any type of athlete, you're a competitor.
Yes.
Sales is a self-driven, competitive environment,
Yes.
right? There's leaderboards, there's goals, there's competition everywhere you go.
Yes.
So you're always to a fault comparing yourself to your peers or others in other companies of how am I stacking up against them? So
Yes.
it's the same way in the sports world where you're comparing yourself to everybody else. So
Mindset, looking at the scoreboard. This is not first level soccer that you guys will have the kids in where we're playing for an hour for exercise, but we're not keeping score. And sales, we keep going. But I took you off path. So you start in sales, you go into mortgages, and where do we go?
So in the mortgage world, the way I got started was I was working with this company, tech-driven company, putting events together for Microsoft, AWS, and Google. We were traveling. Then COVID hit.
Yes.
So events went just became virtual. Everything
Zooms.
became a seminar, Zoom, all that stuff. And it was going well. But in the meantime, my wife was working in the mortgage industry for 5-6 years. And she was in a supporting role, back office role, to a very successful at the time loan officer for Wells Fargo.
Mhm.
And during COVID, there was the refinance and house purchase boom where the rates were 2%.
Yeah.
I saw that, and my honest thought was, if it's happening to them, why can I not do that? Like,
Right.
I can do that.
Right.
I love that role, and I study it, and I was like, okay, so you get to be your own, basically your own LLC. I get to be
Mhm.
Carlos LLC, build
Yes.
my brand, get out there. My first language is Spanish. I get to utilize that to be bilingual, help both communities, and that's how I approached the situation. And the way I got in is I started as what they call a junior loan officer or a loan officer partner, where you will be under a experienced or senior loan officer to kind of have a little bit of a base salary,
Mhm.
but also learn the industry, the rules, the regulations, the products, the sales cycle, the marketing behind it, so you can kind of ramp up without going straight into a full commission-based role.
Sounds like they had a good onboarding process to bring you on slowly, which I think is the fastest way to go. So you get under some good learning. You get off to a good start. When mortgage rates were 2 to 3%, I can't think of a better time to have been in this business. So
I got a good story for you about that.
share it.
So I started early 2022.
Okay.
I think rates then were, if I'm not mistaken,
Between 3 and 4, right?
between 3 and 4. So I started thinking, ooh, we're cooking, we're good. I was dancing, things seemed good. Rates were 3-4%. People were still happy. And between the moment I started and the next 6 months, the
Double.
rates went from 3 to 6.
Yes. Yes.
And it went from me being a mentally happy, like, oh, everything, the transition is going to be so good, I'm going to make so much money, to, oh, let me tell you how the real world in the mortgage world works.
Yes.
Like, this is the real life cycle.
Yes.
This is how real things are, not this fake fantasy world of 2-3%. So that allowed me to slow down, learn the business a lot better, study products, guidelines, study the sales cycle, but also learn, we had to go through tough times because it wasn't as fruitful as when the rates were low.
It's a different game, but people still have to live indoors. Just from a buying standpoint, then from an equity standpoint, people still need access to cash. So even though it's double, the products and service you provide is definitely necessary. So let's talk about today's climate from a couple of different perspectives. The numbers from people that are in the market that are looking. What does it look like? And you can take the lead. You can ask some of the questions here, and I'll listen a little bit. I'll jump in when needed.
Oh, you know, so I think me and Carl's been working together about 2 years now. Carlos has a rental property in Long Beach with his wife and Glen Cove resident. So when I first heard that, us having an insurance background, we reached out, we talked, and then he was able to help us. Me and Mary have been actively looking for a home for about 4 months now, been glancing for about a year. And obviously interest rates is always the bread in between me and Carlos when we sit down, because it changes the money.
Yes.
And so for Carlos, literally right before we got on here, we were talking about DTI, which is debt to income ratio.
Yes.
And what that says is, Kev, congratulations, you make $100,000 a year. You know, your wife makes $100,000 a year. So you guys combined make $200,000. We'll talk about the kids and the student loans and the credit cards. But you guys are looking at $1 million house.
Yeah.
So right away, my brain, the way his brain works is, how much do they have gross? How much are they working with net? Who do they owe? Paul, Peter, and Tom. And then how much money is Carlos going to give you that you have to pay 3 times the amount over the next 30 years?
Proud of you.
I appreciate
Proud
that.
of
man. I
you.
appreciate
Proud of you.
I
See?
appreciate that.
So
You see
Carlos,
how much Kevin has learned in 2 years about the mortgage business? Come on now.
Carlos, how do you handle in today's environment? And I don't want you to talk to today's version of me. I want you to talk to the 28-year-old Kevin Spann Sr. that's living in Chicago. I'm in a barbershop, nice barbershop, and they got these magazines that they're building new homes. Price for a new home, $89,000, 3% down, which everybody get out of the comments, y'all. I'm gonna tell y'all some truth about me, stuff you don't know.
I love this. I love this.
You get excited. 89,000. I'm decent at math. I know I need about 3 G's down. But Carlos, I'm sitting on $11 in savings. I've got this guy, I've got another little guy along the way. If there's anybody in my audience that can relate to 28-year-old me that wants to buy a house in the next 3-6 months, the next year, they ain't got it, Carlos. How do you work with someone like that really needs to be coached up to put in a position to qualify for a mortgage for these home rates that we're looking at on Long Island and in the boroughs right now?
It's amazing how your story relates to 2025.
Okay.
Because even though the houses were 89,000 back then, the salary or whatever income you're earning was probably comparable to where we are now.
I was making 40,000, so I was paid, Carlos. That wasn't like 40. The 40 grand was coming.
But maybe your spending habits were not.
They were not good. They were not.
How many receipts
but it
were you
compares.
dumpster diving for?
Your story compares a lot to what it is now, where it's like people, the houses are whatever the price is, the income is wherever it is, but the savings are not there. Right. The monthly debt is high because of things like cars, daily expenses.
Yeah.
Right. If you have children, family, all that stuff. But I would take what you're telling me about your life, and I would tell you a little bit about what Kevin just spoke about, which is when I speak to someone in your shoes or Kevin's shoes when he started, it's you need to educate yourself because your journey to home ownership, it's not the same as your neighbors or your best friends or your family members or even 20-year-old Kevin Spann back in the day, right? So it's more about formulating a plan that tailors to you and your journey, right? Financial journey. So what we speak about is I would educate every single home buyer, whether they're experienced or not, first-time homeowners or they're buying their second home after they had a first home in 2008, which is a different market, 2025, right?
Yes.
So we talk about what Kevin spoke about, what ratios look like, right? How much money you need to make to be at X amount purchase price, what your savings need to look like, what your debt needs to look like. And then from there, we talk about steps on, hey, you're 3 months away, 6 months away, or a year away from that goal. But you also have to think about that goal as life-changing goal and not I want to buy a pair of Jordans in 3
No.
months. It's more like, hey, this is life changing, because the numbers say homeowners tend to have mommy and daddy stick together if they're homeowners, right? Children's grow up to a certain percentage to go to college and finish high school if they have a ownership, the parents have ownership on the home. So that is the goal that you're trying to achieve. So I try to put that into perspective instead of like, you know what, I'm trying to buy a house, like I'm ready to buy a house. Well, don't treat it as just a house, treat it as life-changing event for your entire family and for generations to come. So when I put it in that perspective and I show them the steps of how to get there, then the homeowner or the potential buyer becomes more aware of their path and less stressed or anxious to get there.
I love what you said, because it sounds like you're giving them a blueprint, like it's possible.
Yeah.
Like, we're not going to close this weekend, but if you follow these steps and you make some sacrifices to give up the immediate for the long term, that you've shown people the path. Is that something that you've had success in taking people along that journey?
Yeah. I mean, clear examples right here. We've been talking for 2 years.
Yeah.
And I mean, I'll be honest. He started with grandiose dreams of, you know what? I'm looking in Zillow. This house is 2 million, 2.5. This looks good. Or, oh, this is 1.8. And then, we sit down and I be honest with them and I go, hey, these are the numbers, what it looks like for 1.8. Are you ready to shell out this much monthly towards the house?
Yeah.
And then he peels it back and goes, you know what? Maybe I'm here and maybe in 5-10 years, I can sell this and be there.
Yeah.
Right. And that's how it works for everybody else, where it's a journey. It's an individual journey to everybody. But the blueprint, the best thing in the mortgage industry is it's mathematical.
Yes.
And there's rules and regulations and products where there is tangible, concrete, factual boundaries on how to achieve a goal through math.
Yes.
Right. So it's not like telling you, oh, there's a dream. No, it's not a dream. It's a mathematical thing that I can put on paper of, you want to get from point A to point Z. These are the steps. Do you want to go along for the journey? Is it worth it for you to go through this journey to achieve the goal of homeownership? If it is, I'm here for you. We're going to do the whole thing till we get there. So
I think it's a pie chart. As we speak to the audience, interesting thing you said, both of you guys said about number one, your first home in Chicago, how old I was. And as you bought the home, I had to do the chores, right? So the way Senior taught me about money was, hey, I'm not going to buy you the Michael Jordan sneakers this Friday, but we live in a neighborhood of 13 houses and I see 2 cars per house. You could wash each car for $10 and get your sneakers in 6 houses. And I was like, oh, that works, right? And then the fall comes, hey, you can rake leaves, you can shovel snow, you can cut grass. And so in the midst of having asthma and being afraid of snakes in the woods, I hated cutting grass. How that affected my decision maybe 15 years later was I bought a townhouse, right? I bought a condo, which was, I pay $200 a month in maintenance fees, take care of all that. And I get to go, Dad can't make me do chores. But in being in a townhome for 10 years, and my wife's been homeowner for 10 years, we're in a different situation because we have to sell 2 properties to look for the quote unquote forever home. And Carlos talks about things of affordability. And so people only focus on the mortgage monthly number. And that comes from when you have an apartment. I have an apartment, a first and last month's rent, maybe security deposit. And I could do 6, 12, 18-month leases. With a home, you're locked in for 30 years times 12 months a year. So we're looking at 360 months of behavior. And so one thing I want to ask Carlos is when you sit down with people and you go through this pie chart of what's your credit score, what's your credit availability, what's your salary. Me and him talking, and I was telling him about where I'm pulling in extra cash from and what that helped me qualify. I didn't know that, where he met his wife, and I used to work at Lifetime Gym, where you go. A 1099 doesn't always help because it's seasonal income, right? Looking for a W-2. I coach a Chaminade. He coaches high school basketball. That seasonal income may not help qualify depending on it because they're judging that monthly number based on what you make consistently, right? And so that affects how people attack a mortgage. Number 2, I was going to ask Carlos, when you talk to people about qualifying for it, what did you share with me about not just the mortgage number, but the property tax and the insurance.
Yeah.
And
Those,
what do people realize in that process when they're coming to you saying, hey, I think I could afford a $900,000 house, and you break it down like, hey, Carlos, I'll be back in 6 months.
yeah. So, you spoke a lot of important topics here, and then I'm going to unpack some of them real quickly, maybe a little broadly. But when it comes to income, there is products for everybody out there. You're self-employed. You might not show too much money on your taxes, right? For those 1099 people where they write off a lot of things, there is products for that. There is more traditional mortgages for people that are W-2 employees and have traditional income. There is mortgages out there or products out there for people that have no income. Wow. And for example, I had a customer where the family member, the mother passed away, sold a $5 million estate home. The person inherited all this money. They currently don't work. They don't have any income. They don't have anything. But we can make an income, and we can give them a product out of those assets that are sitting somewhere, right? So when it comes to income, there's a lot of rules and products out there for everybody, I would say. So my first advice when it comes to that is don't get bogged down by a lot of the numbers, maybe products. Be more proactive and go out there and learn about your specific situation, right? Everybody has their own individual situation. And then to the second part that you mentioned, when people talk about mortgage payments, it's usually comprised there's like 5 or sometimes 6 factors to it. Is principal, interest. Then you have your good old taxes that everybody has to pay. Then you have insurance, which you guys are pros at.
PMI.
Then you will have, in
you
some
don't put
cases, homeowners associations,
I pay that, yeah.
right? Which is in New York is mostly for co-ops, condos. Some communities have it. In Florida, 80% of the communities have it. Then you will have things like you mentioned, which is mortgage insurance or mortgage insurance premium, which is for the people that don't have 20% equity on the home.
And that relates to insurance too. When you get an insurance product, we only insure up to 80% of the home, correct?
Give or take.
Give or take. So same thing. If me and you go both going for $1 million house, you're about to retire, you're selling a business, you got a bunch of liquid, you can put down 200 grand, right? And mortgage 800. I might be a little younger than you, less established, money's a little tighter, young kids, daycare. If I put down 4% of the $1 million, or 40 grand, right? I'm going to owe additional $300 to $500 a month until I get to 20%. So until my equity goes from 4% to 20%, or mathematically 40 grand to 200 grand, my mortgage is more than yours.
Yep.
So sometimes people might get locked in on hey, your mortgage $3,000. All right, great. Yeah, but then you have PMI, you have interest. And for what Carlos said, I'll give you an example. I had a tenant for about 1.5 years and I refinanced. So my mortgage went from, let's just say $1,500 to $3,000. And I took that refinance and I put it all in the market. I didn't buy a cup of coffee with that money, because at any point, right, you have to pull in on that. My tenant just moved out recently and he gave me 20 months of rent. So 3,000 times 20, he gave me $60,000 in 1.5 years. When I look at my mortgage statement, right, the refinance amount was, let's call it $300,000. Of that 60,000, 10 grand went to principal, 50,000 went to interest. So when people see that, like, wait, I borrowed 300 grand from you, Carlos, and I've given you 60 of it. I thought no. I've only paid on the interest thus far. So that is a very granular observation of how people value their money. And this is a bigger thing you could probably speak to. Depending on when you buy your home and how you buy your home, if I borrow, let's say the purchase price is $1 million and I put down 200 grand, I'm financing $800,000 at 8%. I'm going to end up owing about 3 times what I'm borrowing. So when I tell people you owe Carlos $2.4 million over the next 34 years, come hella high water, you got to figure that thing out. And if it doesn't work out with your spouse, if it doesn't work out with the home, maybe there's if you look at Los Angeles right now, people still owe mortgages and their homes were torn up by the California fires. Think about an $8,000, $15,000, some of the celebrities, $50,000 mortgages, and they don't have a home. They still owe the bank. So that's where Carlos is pretty much saying, hey, slow down to speed up, and if you want to talk about that, about what are some of the things as an underwriter that you're like, you know what, I could probably push this mortgage through, but based on this person's habits and their bank statements and things missing, this might be a foreclosure in a year and a half, or this person's pretty solid, even though, things are a little bit tight. So how do you use your discretion when it comes to a person that you think is going to be a good 30-year candidate, and somebody who might, because you have to then buy the home back at 1.5 times, right? If the person forecloses.
So in the reality, like you threw a lot of stuff at me. Let's start with the fact that
you say you're a basketball player, competitive.
No. I just got to, you're throwing things at
There's
me.
3
I got to
questions.
unpack it, right?
There's 12 questions in there.
I got to unpack it one by one. So when you are talking about affordability, underwriting, all those, there are clear guidelines through Fannie and Freddie, right? And investors have clear guidelines where the debt to income, I'm just going to take an example here, quote unquote, the debt to income cannot go over 45%.
Okay.
Right. Which that means 45% monthly
of your gross.
And to explain this in very simple terms, numbers would be, let's say you make $120,000 a year.
Mm-hmm.
That means 10 grand a month.
Okay.
Right. The guidelines say 45% of it is the max that you can allocate towards your house mortgage payment. Right.
Okay.
We discuss what goes into that payment. Right.
Mm-hmm.
So 45% of 10,000 gross is what? 4,500.
Yep.
So when you're looking at homes, if you're a borrower and you're looking at homes and you look at Zillow, their calculation, you should be looking at what says 4,500, right? For a base knowledge of where you're going to be at. Other than that, I can't help you. You can't go over 45%. So that's a good thing about the mortgage industry now from what happened in 2008. Rules and regulations and laws and the guidelines are there to conduct business and be pro home ownership for the long term.
I love that, Carlos. And I love how you explain it. Carlos, I've been networking with the mortgage and real estate industry since we launched this business in 2007. It's amazing to me that there's still people in the public that don't know about mortgage loan officers compared to a bank. And I think I want you to explain the difference first, then I'll ask you a question afterwards. What is the difference between working with someone like yourself who represents the buyer as opposed to only going to your primary bank?
So first and foremost, so the difference is that there's multiple layers of it. So the banks are FDIC insured.
Mm-hmm.
So they have a little bit of tighter guidelines because they are banks, right?
Mm-hmm.
They have checking, savings, investments accounts that they need to insure, all that.
Yep.
Plus, when sometimes they're lending to borrowers, they're lending their own money as a bank, right?
Yes.
Then you have mortgage lenders like myself, where we have a side of it where it's correspondent. So we're lending our own money.
Mm-hmm.
And then there's a side of it where we broker a lot of products, right?
Okay.
And then there's people that are completely mortgage brokers, which they are in the business of intaking applications and then putting it against different banks and different investors to see where would you get the best benefit for, usually, I hope, to all you out there, for the buyer, the benefits for the buyer or the borrower in that case. So that would be the overall differences. Another difference that I would say, usually banks are dealing with their own internal products, right? So they're dealing with their own internal products or sometimes state products. Mortgage banks and brokers deal with all kinds of products, right? In different banks and different financial investors that have different guidelines and have different products for multiple borrowers or profiles for people that are trying to buy homes. So that's the main differences that I would say from both.
That's significant. So for everyone that's watching, listening, enjoying, comment below. If you don't know about mortgage loan officers, if you're local, you're in the Long Island, New York City, the boroughs, Westchester, wherever you are, please tap into Carlos Santana. Tell them where people can find you online. IG?
At Santana Home Loans.
Nice and easy. follow him. He will help you a lot. I had him start the conversation with me at 28 when I bought my first home, in a really fun spot. But I believe in the American dream. I believe in home ownership. My family still owns the first home that they bought in 1956. We're approaching 70 years of owning that home. So I took you through the entry level market, but when we talked, we ran each other a couple of months ago. You spent some time on the high end market. So I don't know. I might have a couple of listeners that have a couple of M's that need to know what's going on in the high end market and the fact that you can help there as well.
No, 100%. So I currently moved from, I used to be in Wells Fargo as a private mortgage banker, right?
Okay.
Which it was more of a little bit of a high end market driven position because I am dealing with the Wells Fargo private bank. In that now at Annie Mac Home Mortgage, I still have all the products because once again, we do broker to some of the bigger banks as well. So we have access to all those products and we can serve those clients as well at a very competitive rate and product level. That market is a little bit different, the high-end market, because some of those clients or borrowers have dealing with a lot more income or a lot more assets.
Mhm.
Whether the assets are liquid or not liquid, they have the ability to leverage those assets to continue to purchase either their home or investment properties. So that market, it's a little bit different because they will have access to different products that are more geared towards high-end clients, where some of them really don't want to liquidate their current investments and they just want to say, hey, you know what, I have 5 million running for me here. How can I leverage that without touching it so I can buy my next home?
They can get like an S block.
Yeah. It's a different question. Go ahead, talk about it.
So
Or ask about it and let Carlos talk about it either way.
This came down, one of the funniest conversations we had before I went to college. You said, hey, I like A's and B's, want you to learn about money.
Yes.
Right? That was his biggest challenge. And so I actually failed accounting twice, all right, at CW Post Lyon University. And that professor took a liking to my basketball game. He was like, you could really play. There's no way you could be this bad at accounting, that good at basketball. But he really broke it down to me in a way where I could understand it. He was a former wealth manager for celebrities in Manhattan. And somebody like Kim Kardashian would be his client. And she would say, I heard a lot about you. You're returning 25% to your clients annually the last 10 years. I trust you with about 10 million, maybe 5% of my portfolio. So if Kim's worth 200 million and she wants to allocate 5% or 10 million to my professor, not only would he get a commission, right? But also he would talk about what she wants to say. So if Kim has 10 million liquid in a stock fund, she has shares of Apple, shares of Amazon, shares of Google, and she's in at a good share price. Kim's not going to sell those shares. She can call up her broker and borrow against it. They're going to say, all right, you got 10 million, you got millions of shares over here. We're going to give you up to $5 million leverage. That's the money that she can send over to Carlos to buy 2 properties in, one in Manhattan and one in the Hamptons. Now she'll pay interest on the 5 million, but the principal's fine. And that interest might in today's market, 7 or 8%. Artwork. If somebody, NBA player owns 30 million worth of art, he could take out a loan against that asset to pay for it. So he's dealing with a completely different customer. But what happens is if the market crashes or if that, artwork isn't worth the same, they have to figure that out after they deal with the products. Like I said, people are just pulling from different avenue streams when you're dealing with high net worth clients.
Yeah, I think it's a tale as old as time where it's at a very kindergarten level. Let's say Kevin has a Twinkie in his hand, and Johnny comes over and says, "Yo, can I get that Twinkie?"
Run that Twinkie.
Don't worry about it. Mommy went to Costco, so I have 36 at home. I'll come back tomorrow and give you 2 for it.
Yes.
That is the whole system of borrowing and paying back. It's like, do you have the ability to repay?
Yeah.
And when we're talking about hiring clients, it's visible that in assets, they have the ability to repay. So risk is much lower. That's where the products come in, like borrowing against your money or, no income, no job type of products.
Book writers, movie directors. If Ryan Coogler, who just came out with a movie Sinners, and he did Black Panther, he was adamant about talking about, leaving college football, going to USC, graduating with 200 grand in debt, and he didn't get a first paycheck until Black Panther. Just 5 years of him not having an income. But if Black Panther does well, he's worth $25 million now. Now he's called Carlos and get a specific product because they have to assess that risk. One question I have for Carlos is the other end of home ownership, building wealth, equity. We talked about that, and positioning yourself to take advantage of a market that might double. So for those customers who bought between March of 2020 and May of 2021, and the interest rates were like 1.9 before it went to 3 and then to 6. And they may have bought it 500,000, 400,000. They bought a lot of fixer-uppers 5 years ago. Those homes are all worth, they're being sold for now 900, a million, 1.1. So as far as timing and doubling your equity or doubling your money, or building up the kitchen and the basement and the driveway and things like that, what's the best part of somebody getting in at the ground level? And then how would you advise them to use their home ownership to get a HELOC or refinance or borrow and continue to build wealth?
So that is a very good question. And once again, I got to unpack it because there's a lot going on there, right? First and foremost, to anyone that is aspiring to buy a home, and this is a conversation that I have a lot because a lot of people are debating between renting and owning.
Mm-hmm.
If you live with your parents, save as much as possible. Let your parents pay for everything. I'm sorry, parents out there. But you're allowing your child to live with you. So, hey, that is the advantage of it. And you want your child to save because they want to move on with their lives. So if you're living with your parents or living rent-free, save up as much as possible. Because home ownership, it is the number one tool to build wealth in America. That's why they call it the American dream.
Yes.
Own a home, right? But going back to it, what happened between 2018 and now was a little bit of an anomaly, right? Where home prices skyrocketed because of the situation of COVID and interest rates being lower. I'll bring it back to example for me is I bought my house in Glenhead in 2018 for a little over $500,000.
Okay.
That was 6 years ago.
Okay.
I think my house is probably doubled by now.
It's a beautiful thing.
Have I done that much work to my house to double? No. It's just the way the market grew. Have I rented the last 6 years? I would have been out over $100,000 in rent.
Yeah.
Right. So I would be paying for somebody else's equity, somebody else's growth, somebody else's dream. Right. Moving forward, the projection is houses are going to increase 5% in equity or prices year over year.
Okay.
What that means is, and correct me if I'm wrong with the math, is out of every $500,000, like if you buy a house for $500,000, it's going to increase 25,000 every year.
Perfect, man.
Right.
Perfect.
So to go back to your question about the why buy, why purchase, why own, is because multiple things are going on with your life as you are growing as an individual. Maybe you're earning more, right?
Mm-hmm.
That goes along with you learning how to save more, be more financial savvy. That goes along with the 5% that you're going to make in your house every single year. And people say, oh, but houses, they cost so much. Look at the monthly, look at the repairs. But that's your piggy bank.
Yes.
Right. And you, Kevin Spence Sr., you can attest to that.
Yes.
You own your home. I believe Kevin said 2001.
Yeah.
2001,
Yeah.
So in 2001, you bought your house.
Mm-hmm.
Nobody can take that away from you. The only way somebody can take it away from you is you put it up for sale and you will cash in for hopefully every single dollar you've put into it and more.
And some.
So that is my talk to everybody out there that is between paying $5,000 in rent for a full home for their family, or going out there and maybe spending a little bit more, saving money, sacrificing a little bit for the larger return in the future. Because every year that you don't own the home, you're not only paying for somebody else's home, but you're missing out on the equity that is being built year after year. And as you mentioned with the HELOCs, the refinances, any second loan that you do against your home, all the leverage that you can use your home as collateral for multiple things, you're missing on all those advantages, plus all the tax advantages too of owning a home as well. So yeah, that's what home ownership would bring to your family, apart from the biggest thing, once again, which I make it all about family, is statistics say that if you own your own home and you have security of owning your own home, you have the ability to, by statistical reasons, is a more positively sound family, and your children will grow up in a more secure environment and then have a better impact for the future.
More than fair. We're going to get ready to land the plane. We've had a great podcast. I think we've touched a lot of topics. Talk a little bit about your company. I'm looking at your logo on your jacket. I keep thinking I'm messing up the letters. I'm thinking Mortgages Fannie Mae, but you finally pronounced it. Annie Mac. Talk to me about Annie Mac.
So Annie Mac is a mortgage bank. As I mentioned before, we not only have our own in-house lending products, but also we broker a lot of products as well for people that have non-traditional income sources or financial profiles. We are pro borrowers, pro realtors, where we formulating products around what the market is giving to us currently to try realtors forward their business, but also borrowers have different avenues to qualify. We have invested heavily in some technological advances as well, where I wanted to highlight something that you were mentioning before, is to everyone out there. I know I'm Carlos Santana, and I would love for you to utilize me in all 50 states on getting your mortgage. But my call to action to all of you is, with the technological advances that we have right now, you have the ability to go get pre-approved, no cost, no commitment, and they do not ding your credit. They do soft credit pulls now.
Nice.
So
nice.
When you're scrolling, and I know a lot of people do it, you're scrolling through Zillow and you're looking at $1 million homes, $750,000 homes, $500,000, $200,000, $1,000 co-ops, whatever your dream is, you can tangibly know what you can afford.
Yeah.
You don't have to scroll aimlessly thinking, I make this and you know, I can afford that. You can tangibly call your local trusted person and say, hey, can I get pre-approved?
He did it for me 2 weeks, literally last week.
So
yeah, my brother-in-law, my wife found a house in Melville. I told you about it. Really nice home, one owner over the last 50 years. I think the purchase price they were asking for $899,000. We did some research on the block. We didn't see a house like over 780. So we figured we'd give him an offer. And so I text Carlos on a Sunday night at like 9:30 p.m.
Powerful.
And I sent him the property. He sent me back the pre-approval within 8 minutes.
what time was that?
You probably called me I probably texted you 9:30 p.m. on a Sunday night.
That's different. Don't get used to that.
I will show you the
service. You're not selling that.
No, not everybody's doing it out there. So.
Doing that. Like, literally, I text my, hey Carlos, here's a property. We're serious about putting all. We saw it on Saturday afternoon. I text him Sunday night. He had a pre-approved for me in 10 minutes. We then sent it to the lady. We sent her proof of down payment. Unfortunately, we lost the bid. You know, it did go over ask, and we thought we can get it right under ask, but that's the nature of the business. But no, Carlos, what would an individual who's watching now or may see this next week, next month, next year, what would they need if they call you to see what they will qualify for? What documentation? What are you looking for specifically?
Beautiful. So at a very fundamental level, the way the process goes is you reach out to me, we talk. I tell you a little bit of how you go from A to Z on a mortgage process. I tell you, hey, in the beginning, let me send you this application link. It takes you about 15, maybe 20 minutes at the most, because it's very fundamental information about who you are, where you lived, where you work, what your income is. Are you a homeowner? Yes or no, right? Some very simple questions. Then after that, I would ask for income documentation, whatever that means for your financial or whatever your job situation is, where your income comes from. It could be Social Security, pension. It could be you have a trust, you have W-2, investment accounts, right? Income can come from, you literally have a lemonade stand in front of your house.
Yeah.
Right? Cash
I'm
flow.
getting it. I'm moving this lemonade.
We take a look at that. We take a look at assets, and then obviously the big one, we pull your soft credit.
Okay.
And we look at those numbers as well. And from there, like I mentioned before, it's not like I'm Dr. House, right? Where I'm trying to figure out some sort of disease, but it's mathematical. There's guidelines, and I will put you in different boxes and I'll tell you, okay, this box can do this for you. This box can do this. And we also have this other box that, it could be a box where you get down payment assistance.
Yes.
Right. Or you have a break for buying a multi-family home.
Yes.
Right. So that's the way it works. I would intake the information. I would see your entire financial profile. And from there, we would sit down and I would educate you of different products. And we move forward the way I did with you. The reason I got back to you so quick is that we've been working for 2 years. So I kind of know your financial profile. You've been sending me houses. So I kind of know where you're at. I can go back. I know how much you make, basically, what's going on, your debts and all that stuff. I open up my laptop, and from there we go back and forth. I let you know what the monthly payment will be for that potential house that you like. And you tell me, you know what? We want to put an offer in. So I'll send it to you. If you're dealing with a realtor, I send it to them because we all work as a team, and then we go from there. But my biggest message, if anybody takes any message from me today on this podcast, on this show, would be it costs you nothing to know what you can afford. And why not know? Why not know the number that you're supposed to be at? Why not know the number of like monthly payments for that dream home that you have? Not only because it puts a perspective of it goes from fantasy to reality, but also if you have goals that you're setting to own a $2 million condo in New York City because you want to live the owning Manhattan life, right? In Netflix, you will know how to get there step by step instead of thinking, you know what, one day I'm going to be a millionaire. No, you don't have to be a millionaire if you want to own that. We can mathematically make it possible. And for those that are getting into this country and migrating here or been here and trying to get their first foot on the door, or somebody that is younger living with their parents and saying, you know what, I want to be a real estate investor. Reach out to your local trusted loan officer and get those numbers. Cost you nothing.
I love it. You, in our insurance agency, our mission statement, we recite it every Monday in our morning meetings, is that we help protect people's American dreams with all of the recovery plans that we offer. I love your positioning of how you can accommodate and get mortgages for people wherever they are in the American dream. I think the whole world is in transition where the word income means something different. W-2, 1099, investment incomes, passive income. There's so much happening that's not traditional. And I think sometimes people talk themselves out without asking that question and talking about it. Last question. The plane should have landed, but I'm a little bit obsessed with AI right now. I just need to ask you, how much are you using AI in your business?
I am right now, if I had to put a percentage, I use it about 20% of what a maximum 100% could be used for the mortgage industry. And right now I'm dabbling more on the sales marketing type of AI, maybe a little assistance here and there. I do a lot of my weekly letters through AI, right? So I want to say 20%. I usually more marketing, more sales, tactic driven, creating maybe some images, some scripts for my videos.
Yes.
So, but there's a lot more out there.
There's a lot. We'll talk off the podcast. Any closing statements, anything you want to say before we wrap it up? I'm going to give you a leading one. You mentioned your wife like slightly, but I think you should shout out. I think she's going to watch this podcast. She needs to know that you acknowledged her. So shouting her out plus whatever you want to close with. I think you already closed a couple of times. We extended a little bit, but the floor is yours. Anything to ask before we close out, and then I'll wrap us up.
No, he's been great.
So Kevin mentioned it. I don't want to get in trouble at home. Shout out to the number one in my house, the queen, the biggest inspiration for all of us at our household. My wife, as I told you, I stopped playing professional basketball, which takes a lot from getting away from the dream, right?
Yes.
Traveling to different countries to be with her because I knew that she is worth it and that much more. She is a basketball Hall of Famer and all the name, the word. Yeah, my biggest thing here is
just one. Be honest, she still beats you.
1,000%. She's the best athlete in our home, and I'm happy that she's there to teach all my kids how to be A1 athletes because let's be honest here, she was an Olympian, right? She went to the Olympics, which is the pinnacle of any athlete every 4 years. So when it comes to that, yes, she's the best, and
It's
That's
coming
just
from a
being
guy who
honest.
my wife's a better shooter than me, so I can't.
There you go.
I'm
Yeah,
just
yeah.
accept it.
But all I have to say is, at a human level, if you have any children, show up for them, right? That's my number one thing, being a father, being a family man. In this world, things we have here, this podcast, 1,000, 2,000 years ago, there was nothing like this, right? It was just a group of people walking around with their families. You eat every day, you drink water every day, and that was happiness. Happiness changes throughout time, right? Whether you're here, whether you're in Dominican Republic, in another country, people are happy everywhere with different things. So,
speaking of which, can you ask a question in Spanish and can you speak to my Spanish audience?
sí, pues claro.
Sí. Para comprar las casas, es un rico, es un pobre. ¿Qué preguntas para un personas una comprar una casa?
I like it. I like it. I like it. Listen, I like the effort. A lot of people are afraid to try and fail or seem silly. Look at Kevin right here.
Shoot 100% of the time.
There we go. I love that. And
I
everybody
hope he
should
could
take
break
that
out
along.
that sentence 10%.
I got it. I understood.
Simply, asking about buying homes, and I'm going to answer it in Spanish too.
Go
So,
for it.
para los oyentes que hablan español, si quieren comprar una casa, es muy simple. Tienen que solicitar de su banquero hipotecario local que ustedes confíen para educarse en las maneras, los productos, su presupuesto para comprar una casa. Todas personas tienen un presupuesto que eres individualmente para cada familia, para cada persona. Seas dueño de compañía, trabajas por cuenta propia, trabajas para otra persona, toda persona, toda familia, toda persona en este país, tengas papeles, no tengas papeles, tengas ITIN, no tengas ITIN, hay muchos productos para ti. Y si quieres comprar una casa, si ese es tu sueño, pues puedes llamarme a mí, puedes llamar a otra persona que conozcas, pero lo deberías hacer porque no cuesta nada y no tienes ningún compromiso.
Gracias, senor. Gracias, senor. We have a market of 1.2 million Latino people identify as Latino between Nassau County, Suffolk County, and Queens is growing. So real important for you to share that in that market. We have a ton of realtors, insurance brokers, such as myself, that love to connect those communities and to help fulfill all of the American dreams for everybody from every country, wherever you are, whatever you'd like to do. I strongly encourage you to reach out to Carlos. Carlos, got one more thing before I wrap it up.
No, I want to give you your flowers. Listen.
Now,
I want to give you your flowers. So, all right, I want to give Kevin Sr. and Kevin Jr. their flowers because I tune in to the live, right? I'm looking at it. The Instagram says to me, Papa, oh, Kevin is live. I go in. Every single time you are giving information.
Mm-hmm.
You're not requesting anything from anyone. You're out here giving information, educating the public, and that is the biggest service anybody can do, right? And I commend you for that, and I give you your flowers because, as you can see, social media is flooded with people asking for stuff. Here's my course. Here's what I can sell you. You just stand up here and you say, you know what? I know these people. Let me put you in contact with them. Learn from them so you don't have to make the same mistakes I did. And I give you your flowers. You show up here every day. Listen, this is a studio. You invest in this, and it's amazing because you're offering it for free to the public, and I love that.
I love it. I only do it for the 28-year-old version of me that needed the information and the money and didn't have it. So I needed this information, so I try to give it to other people. If anyone tuning in, paying attention, follow everything that we're talking about doing online. We have some things coming up. October 13th, Monday, October 13th, we're doing a business and AI expo. So if you want to see people like Carlos, you want to connect with realtors, other people, if you're a vendor with a small business, talk to us about getting a table at that event or just come and support the people that we have. Most importantly, we will talk about AI on that day. Most people know that AI stands for artificial intelligence. I like playing with those words. I like saying access to information. So on that day, we're going to give people a ton of access to information. Hope you're free. Hope you can make it. Hope you'll be there. People will want to talk to you, and we'll continue this conversation online. So with that being said, thank you. We'll close it with an attitude of gratitude. We appreciate each and every one of you taking time out of your busy day Whether you're watching us live on Facebook, Instagram, or YouTube, or you're watching it at a later date, or you're listening to it in your favorite podcast platform, we greatly appreciate you. We couldn't do it without you. And I hate to be the kind of brother that gives you a favor and asks for a favor, but please click the like and subscribe button below. Numbers matters, and everything that we do, the math makes sense. God bless, stay blessed by the best, and have a wonderful day.
Thank
Peace.
you.
Have a good one, guys.